today. Well, tell us about what's going on. First of all, let's get your view as to GST, its likely effect, and will it really help to formalize the Indian economy, which is, I think, the longer-term stated goal?
Basically, India has been doing a lot of leapfrogging activities over the last 25 years. Basically, if you look back, we used to take practically 5 years to get a telephone at home, around 25 years back. And today, in 10 years' time, everyone has a mobile phone in hand, probably more than one. And that's what India has been doing, even in the unique identification framework, that is like a social security number. Indian infrastructure is considered now the world-based. Similarly, payment technologies, India is kind of leapfrogging quite a lot. And this is basically in a series of so many leapfrogging activities in using computers in day-to-day life. And that's where the GST is more significant from that perspective than just calling it goods and services tax. Of course, it does combine a goods and services aspect of it, so that it becomes like a one comprehensive indirect tax. But over and above that, it's using the automation in a very large country. I mean, India is 1.2 billion people, which is like 17% of world population. Most mid-sized Indian states are larger than all the countries you have been discussing in the morning, other than US, including probably Russia and so on and so forth. Other than, I mean, one single state called UP has 200 million people, which is larger than the top 4 countries, and larger than most countries other than top 4 countries. So it's a very complex country. But now with GST, all of them are coming into a single kind of tax regime with center and state and all coming together. And fortunately, there were a lot of apprehensions over the weekend that when it comes in to effect on July 1, things will start collapsing, Indian trains will stop running, cancer patients will start dying. Nothing of that sort happened. Yesterday, also on Monday, first day in terms of working, India worked pretty smoothly. So I think automation seems to be part of India's sort of day-to-day life. People tend to get hooked onto newer levels of automation all the time.
What I'm hearing from you is that we're going to get a common playing field and creating a common infrastructure where people can, trade and engage in business. Is that why you think that the implementation of the GST in India is going to spur 1,000 IPO listings? I mean, how are we going to get there?
It's pretty ambitious.
There are 2 aspects to it. Yeah, there are 2 aspects of it. It may look ambitious from a small country perspective, but India is a very large country. We already have 5,500 listings. And so it's, I mean, even if we add 1,000, it won't add more than 20% to our total number of companies listed. In India, we have more than 1 million companies across the country. And so 1,000 is not even sort of 1/10 of 1%. And that's how we look at it. In terms of why more companies will select to come into the public market, is because many small companies are currently state-oriented. They deal in their states only. Now, with the GST, they will be able to kind of deal with other states and so on and so forth. They will require more growth capital, and that's why they will come into the market. I would say the other way around, that if I don't get 1,000 companies over the next 5-6 years, I would be disappointed.
Well, Ashish Kumar, okay, there's a lot to grapple with here as you try and grow your market that much. I mean, you've got, of course, insider dealing probes. You've also got on top of it price manipulation accusations and low volumes at times. How do you also clamp down on corporate governance on the companies which will list? So, you've got a lot to do. How do you manage all of that?
It's basically, if you look at it, this news keep on coming out of various things. But in a universe of 5,500 companies, something here and there always keep on happening. At the same time, if you look at India's ranking from World Bank or other reports, today Indian corporate governance is among the top in the world, probably top 10 percentile. Even in terms of the investor protection, it's 7th best in the world, even ahead of US and so on and so forth. So in an overall sense of the corporate governance framework, India is far ahead of most countries in the world, because over the last 5 years, our regulator, SEBI, has basically created regulations and also implemented them, executed them well, so that basically slowly the market has come to a conclusion that if you need to be listed, you need to be really sort of behaving well. And that's what we look at it. I mean, what you see as news is basically fringe. The way they say that a dog biting man is not news. Man biting dog is news. So what you get to see the news is all the dogs, I mean, all the men keep on, they don't bite dogs all the time, right? So that's where you end up sort of generalizing things, looking at news.
Yeah, but it's you know, nobody wants to get bitten at the end of the day, whether you're a man or a dog. And you know, to your point, Rish, how do you create an environment in which that transparency is there, that corporate governance is creating a confident market when it comes to the BSE? I mean, to give you credit here, you've transformed the BSE from a coalition of brokers to now a very successful listed corporate entity. So where is the next step for the BSE?
Thank you. Basically, I think there are many things BSE can do. I mean, it's a 143-year-old glorious institution, and it's basically what we call ourselves as a transaction processing expert. So we basically have now a network across India. Probably 1 million people are sort of dealing on BSE's platform across the country, almost 2,000 cities. On a sort of microsecond basis. We have the best technology in the world with 6 microseconds response time, and so on and so forth. So we are trying to now improve the other part of the infrastructure in India. Of course, we will continue to play our main role of collecting the resources which are with households. They save a lot of money, and we will plan to basically we try to take that money, give it to the companies. Last year alone, in debt, in corporate debt alone, we raised almost $35 billion, larger than the entire banking system on net basis. And now this year we started raising funds for municipalities, first time after almost 2 decades. And so we want to raise a lot of funds for India's growth. India saves close to 30% of its $2.5 trillion GDP. So that's almost $750 billion a year. On 10-year scale, at 7% growth, we'll be saving as a country almost $10 trillion. And we want to actually raise 25% out of that for the corporates, municipalities, governments, in form of bond, equities, and so on and so forth. That is one side of it.
Mm-hmm. Yeah, you know, there's a lot there, but the one thing which you really need in your markets is liquidity. How do you get that? And, you know, you've got to get more retail investors involved, high-frequency traders and market makers to actually do that. How do you go about it?
Basically, in terms of, if you say more liquidity, liquidity is basically a function of the outstanding sort of stock available. And today, even SEBI, which is our regulator, has also issued new guidelines, or at least new consultative paper for the corporate bonds, that they want to reduce the number of series which people are issuing. Earlier, the issuers were issuing practically every day a new bond, and that reduces liquidity. So they want to kind of combine many bonds issuances into one. Probably, I think each issuer would be getting up to 17 number of ISINs every year, and so on and so forth. There are many such situations or such ideas floating around how to improve liquidity in secondary market, in debt market, also in equities. And today, Indian markets, in some sense, because of the derivatives and also equities trading, are amongst the most liquid markets in the world. Basically, I think NSE, which is our competition, is, I think, first or second in the world. We are almost 7th in the world in terms of the liquidity itself. So we can continue to complain, which is also valid for some stocks. But in some sense, we are also amongst the largest, most liquid markets in the world in equities, derivatives, bonds, and so on and so forth.